The CT Responsible Global Equity Fund is a concentrated global equities fund. Beyond looking for companies with the appropriate financial criteria, this fund also needs to comply with our responsible criteria. That includes specific exclusionary thresholds that we look at across a range of product and conduct considerations. But beyond that, we also want the fund to align into the positive sustainability themes that we build the fund around. Our investment process for the fund is based on identifying quality growth companies that are committed to sustainability. In terms of what we mean by quality, we're looking for businesses with strong competitive advantage. That might be defined as wide moat. We're looking for positive pricing power, and often they're taking market share. These companies also need to have high or improving return profiles. We typically use return on equity or return on invested capital as yardsticks for this. Alongside this core investment process, we have a long-standing responsible investment framework defined by 3 words: avoid, invest, and improve. We seek to avoid those companies with damaging or unsustainable business practices. We do that both through the use of these exclusionary criteria, but also it's a mindset of the team. We don't wish to invest in sunset industries with damaging business practices or exposures. Thereafter, we want to invest in those companies that are making a positive contribution to society and the world. And then lastly, we believe that it's possible to help our companies improve using our influence as an investor to help them move forward on their sustainability strategy, both through in-depth company meetings, through engagement, and through voting. Typically, when we build the portfolio, around 3/4 of the fund would be invested in so-called best-in-class quality growth companies, and around 1/4 would be in this improver cohort, companies with the potential to get to where the rest of the portfolio are today. So this is an active 40 to 60 holdings fund. As a consequence of that, the majority of the risk is stock specific because we're bottom-up stock pickers. To manage that risk, we need to know our companies really well. And we're very lucky to have a fantastic in-house central research team who we work alongside on a daily basis. A second risk is that this is a portfolio of quality growth companies, and that comes with a very distinct factor footprint. There will be times when quality as a style is underperforming. That may represent a more challenging backdrop for the fund. A third, an important risk to consider when investing in this fund is that it is a screened fund. This means that there are certain sectors and areas of the market where we will have a structural underweight and overweight to. Whilst this can be difficult for investors to navigate for certain periods of time, we believe investing with a mindset around sustainability themes is a great long-term way to unlock value for investors and gain exposure to some of the most important mega trends of our era. ESG considerations are embedded throughout our investment process, from the original idea generation through to the screening of stocks by our responsible investment team, and then onto our investment analysis, portfolio construction, and finally through to reporting. So it is highly integrated, and we think it's an absolutely core component of this fund. Over the decades we've been running this fund, we've seen it serve several different purposes for investors. We do know that this fund does represent a core allocation for certain of our clients. These typically are clients who really want a fully ESG, responsibly embedded approach to the universe of stocks that they're investing in. They want to know with assurance that they're not going to be exposed to undesirable areas of the market for them. This fund is also highly suitable for investors who have a dedicated sustainable global equity sleeve, and they want to know that ESG considerations are formally and fully embedded throughout the investment process. We also know that our fund actually offers a great diversification play compared to other mainstream global equity funds because of the fact that we are not always exposed to the same large benchmark holdings. it actually is very additive to have this responsible global equity fund alongside their existing holdings.